Hey everyone, Shane here, founder of Capital Growth Traders, and today I want to talk about one of my favorite indicators in a trending market, and they are the EMAs. Okay, so basically, what our EMAs are, they're an exponential moving average, and what this does is it will actually plot a line on the chart to show you that the average price of this asset is this amount, right? So if we get too far away from them, these act like magnets and pull the price or the asset back down. So the asset will most likely go back to the average price. If you think of it about like this, where you're going to buy a house, right? And the person selling the house wants 1.2, $1.3 million, but you've done your research and you've seen in that area where that prices are actually only $1 million. You wouldn't go and go, hey, I actually want to buy this house for $300,000 more expensive, right? You would actually start negotiations to bring the price down to get it as close as possible to that $1 million price mark. Yeah, that's the most sensible thing. So it's the same thing in stocks, crypto, and Forex, right? Understanding where we want to be purchasing these assets from. Now, when we start to go into a little bit more in depth around support and resistance and EMAs, right? You can see here this big circle I've drawn. It is showing that there is a huge resistance here. Okay. Now, we've had a big push. XRP's had a really big push up into this area of value. But what usually I've noticed is in my experience, is that price won't push through these levels until these EMAs start to push them out. Okay, so you can use these on every time frame, the 1 hour, 4 hour, daily, weekly, whatever it may be, right? But I found in my experience that it's kept me out of a lot of trouble and a lot of losses as well. So now we can notice that this EMA, the average price is around the 81 cents, right, on the daily time frame. But because we've had a really big push up, we've got to that $1.26 mark, but we don't have enough strength to push through that resistance yet. So what's going to usually happens in my experience is that price will start to hover around here, and then we can start to, find cheaper levels to purchase this asset and as close to this price as possible. Okay, so what I tend to do, especially on leverage trading, I've just closed out, $15,000 worth of profits on XRP, and I'm going to wait till it gets a little bit lower to start buying in to go up to that next leg, right? So we can start to go down to these smaller time frames to go, all right, well, where are these levels that people potentially may trade from, right? Or where is this asset going to start respecting? So I'll start to stalk this coin a little bit more once we start to, come down into these levels a little bit more, and I'll start to take positions from the wicks, from better positions and things like that, bullish candlestick patterns, and just showing where buyers are wanting to buy this asset from. So then we can start to take that next leg up. Not only with EMAs, they're fantastic because they do show us a trending market, right? So this really can show us our bias on, are we going to take longs, are we going to take shorts? So this will actually reduce confusion of what trade should we be looking for? Are we on the right side of the trend, especially if we're new traders in the market, right? Because we don't want to be doing fancy stuff like counter trend trading and stuff like that. That's show pony shit. There is no bias on how money gets into our bank. So why not make it as easy as possible and start, being on the right side of the trend, trading from areas of value to give us our highest probability to take those trades and to take those wins, right? Our money doesn't care how it gets in our banks. Okay, I'd rather be right 4 times out of 5 than having the one win and losing 4 and then bragging to all my mates and going, hey, I caught the reversal. Like, there's no point in it, right? We're all here to make money. We're all here to put money into our banks. So let's make things as easy as possible. Now, the other thing I love about EMAs is that if they're not fanning out like this, right, and they're pretty much flat, this is telling me that we're in a ranging market. We're in a consolidating market. Okay, so not much is going to be happening, but it's really good to start building positions in these markets, right? But it also reduces FOMO to go, holy shit, I don't need to get in right now. I can wait for it to break out if I want, depending on what type of trade or trader you are or trade you want to be taking. Okay, because you could be spot trading, you could be long-term trading, you could be putting your money into other assets, right? So you could be like trading like that. If assets are moving really nicely, you leave your money into it until the EMAs are flat. You know it's building a position or it's consolidating, so you can take your profits and put it into something else that's trending. So there's so many multiple ways of actually, trading, especially a bull market. Okay, but if EMAs are sideways, price is usually going sideways and there's not much action. You can see here, right? Price sideways, push up, bang, into a resistance and down. So you can see here, EMAs are trending. We're moving nicely. EMAs are going sideways. We're not really doing too much. So, if EMAs are like this, markets are bullish, right? If EMAs are sideways, markets are sort of going like this. If EMAs are bearish, markets are sort of going, like this on a bit of a scale like that, right? Sideways markets. Now, if you are interested in learning how to trade the financial market, stocks, crypto, forex, whatever it may be, we do run personalized mentoring programs, right? To help you become a six-figure trader or become whatever you want to be in the markets. Drop a comment, send us a message if you want to make some serious money.